All right. Get it. My audio connected correctly. Record this one. All right, so I'm looking at USDJPY right now. USDJPY, USD and JPY and gold are the two pairs that I'm liking to trade right now. Um, I want to incorporate AUD JPY into that palette as well, just because I like the similarities between price movement with USD JPY and AUD JPY. Um, and then the if we look on this side of the screen here, the price difference between USD JPY and AUD JPY not too far off, so I can use that to assume that volatility is the same in terms of, you know, when I enter a trade, how much a 10 pip movement is going to make me essentially. We know on gold, like that 10 pips can happen really, really quick. And so the volatility is a lot different here on gold. Um, but gold will always be a pair that I trade, a metal I trade. Um, just as I get more and more knowledgeable about gold, I'm just opened up to so many um, different ways to utilize that asset. Um, so it's not that I won't be trading gold anymore. Uh, I just like the stability of USD JPY due to its lack of volatility, and it's still very like the pair moves every morning. This pair moves, but just in terms of how those moves look, it's just a little bit different. Um, one of our members in the Discord, he said something that I love the way he put this about gold and USDJPY is USDJPY moves a lot quickly and or excuse me, that's backwards. USDJPY moves quickly a lot and XAU USD gold moves a lot quickly, right? So it's going to move 100 pips in a matter of 25 minutes, 300 pips in 25 minutes. I can pull up the chart and show you. But USD JPY on the other side of that is going to move as much. You know what I'm saying? Like, look at this move. We go from just bullet bottom of that move to top of that move. But that's only about 87 pips, right? This same move on like a gold chart is probably going to be somewhere around a couple hundred at least. Um, but long story short, like in USD JPY so far, um, just in terms of price action, price movement, just like the way it looks, super clean, super clean. Let's take a peek at news and see what's going on there. There's something else I actually want to show you guys that I think is pretty cool that I did not know was accessible. Um, well, I guess I can't say I didn't know. I never sought that information. I think a lot of the time, we say we don't know certain things and we claim we don't know certain things, but we haven't even sought that information to be able to interpret or understand. And I heard that all famous jingle bells. So let me see, my man Justin, what's going on? News in about 37 minutes. Um, NFP, so that's if you guys see that in the trading community, non-farm payrolls, NFP it should have a significant impact on price. I haven't got a chance to get to that in our macro channel yet, but trust and believe, guys. Let me show you something real quick. This macroeconomics channel here in our Discord is going to be filled with valuable very structured information. So it's not just going to be a bunch of stuff sporadically thrown in here. Our Discord has a lot of really valuable information to keep up with the current news and macroeconomics, things that happened maybe last week in folders, things that without news really causes. Yes. Yes. And what Justin just said, these weeks without news cause us to be really patient, which that is a great, great point. Um, I like sometimes trading without news just because I don't have to worry about any areas of the market where I'm gonna get, manipulated out of and whatnot. Um, in terms of that news, right? Because that news brings that additional volatility. So I can normally count on a clean moves without news, which is why actually Monday trading has grown on me a little bit. Because that Monday day is generally just from the back testing, and now it's very hard to, speak in that sense, in terms of trying to put a certain frequency on it, but just from the back testing, I'd say probably 70% of the time, maybe even less than that. From what I've seen, clean moves on Mondays. Because of to your point, Justin, limited news. Today we got the non-farm unemployment. What else do we have? Crude oil stocks change. That's an orange folder, but the reason that I'm bringing it up is because this section, we would not see any of this on our Forex Factory. And if anybody from Forex Factory sees this, any of our live streams, they're probably gonna think that I'm an advocate for my FX book and I'm completely just trying to degrade their platform. But that is not the case. Promise Forex Factory, that's not the case. Oh, interesting. So crude oil inventory actually has an orange folder today. First time I've seen this folder orange within this platform, within my FX book. It's the first time I've actually seen crude oil inventories orange, right? And I'm going to spin back around to why that's even important. But what is also interesting is I don't see this folder. And that's the right day. Today, 7 a.m. I don't see this folder on this chart. Am I missing something? Yeah, that's so that's kind of weird, that type of stuff to me, I just don't really understand it. How, a credible company like forexfactory.com's, quote unquote credible. I've only known for Forex Factory ever really since I've been trading. I know my FX book too, but just only use Forex Factory until the last, month or so, until I've moved over to my FX book. But if you look up here, it says there's 45,000 traders online, right? What the heck? There's not. One of the most, influential folders that's happening in 33 minutes. It just blows my mind right now how that's not on there. Which just confirms this platform, right? And one thing I like too is if you look on the left and you look on the right, it says we support over 10,000 brokerages and banks. So we know the institutional players within the market, brokerages and banks. So now this is most likely, I can't even say most likely, but I was gonna say this is probably on the retail trader side of things. But I'm sure these same banks that they're involved with, brokerages that they're involved with, if they're involved on the retail side for, people like me and you who trade, then I can make the assumption that they're probably as available to, those big dogs and those same institutions and entities. But let's get to NFP real quick. So maybe that's why it's not on there. It's the annual revision. I still don't think that's a good reason because it's indicating it's a high impact folder. Now, anytime I see a high impact folder, I'm gonna be a little cautious and a little I'm not cautious, but just really aware of what's going on, what's happening with price. Um, And so let's take a look at this real quick. So United States farm non-farm unemployment annual revision. Let's look up why this is important because it's what it's not giving me is any previous data. It's giving me the next release, which is today, obviously, but it's not giving me any data. It's just showing me the sentiment. Um, and maybe it's showing me this is guys, this is really, really helpful right here. So what I've done, right, I clicked on the specific folder in my FX book, right? And then what it did, it brought that folder up, right? And now up here, it doesn't look like it's showing anything. Latest release, no data, that's fine. And it doesn't really like it's giving us much info, right? But then if we scroll down, this is the Forex sentiment. And now, if I'm understanding this correctly, the only reason why these specific pairs have appeared since I opened this folder up is because these pairs are most impacted by this folder. That's how I'm interpreting that. And we can confirm that by this. So let's click on this one. You see how it shows a little something different? Like it with that folder, it's showing us the data that matters, right? And okay, so there's the sentiment again. Let's see if it changed. Euro, GBP, it makes sense. Euro, GBP. Yeah, maybe I'm just completely wrong. I'm not sure. I feel like that's exactly why. Let me actually try something. So if I were to click on one of these, nope, it stayed the same. So maybe they're just showing us a brief look into the sentiment as we click on the folder, which is fine. That's why I wanted to double check. Um, so let's see. Let's get into this. Let's get into this NFP really quick. I'm all about efficient, productive work here. So let's do a little. Give me everything I need to know. Being involved in the financial markets and observing macroeconomics. Tell me about how the non-farm payroll and revision will influence DXY and other currencies. All right. So and then I let AI give me its response. I keep going down because it's consolidated right now. I kind of wanted to give me just a little. Actually, let's just use this. This is just like the quick version, right? The non-farm payroll annual revision can have a significant impact on the U.S. dollar index, which is why I don't understand why I wasn't on Forex Factory. NFP report importance. The NFP report is one of the most closely watched economic indicators in the financial markets. It provides crucial information about the U.S. labor market, including total number of paid workers, excluding farm employees, government employees, private household employees, and non-profit organization employees. It talks about the employment rates, average hourly earnings, and the labor force participation rate. Labor force participation rate. I'm assuming that it's referring to the percentage of the population that is in the labor force that's working, that has a job, and now excluding a certain number of people based on whatever specifications they choose to draw out as guidelines. But impact on monetary policy, we know this is important because why? We know this is important because we have something called the CME Fed Watch tool, and this is directly what the entire, I'm not going to say the entire, but the major financial markets, those companies that are
analyzing on a wider scale, the Goldman Sachs, the Barclays, the Bank of America, they're looking at stuff like this. I forgot exactly where this is from, but I'm pretty sure the U.S. Department of Labor and Statistics, even like this is a credible source for is what I'm getting at. Um, and so this continues to fluctuate day by day, right? So the next meeting for the rate change is September 18th, right? And then we know the next meeting is right either before election or after election. I forget which day. But this keeps fluctuating in terms of this is the current rate, right? The current rate. So what we know about the interest rate, we know that is it's for the lender and the borrower, right? And so when the lender lends to the borrower, this is the interest rate, 5.25%. So don't look at it in they're grading it in something completely different. I have no idea. Base points, I think that's what it is. But just look at it in percentages, right? So this is 5.25% and to 5.5%. And so that's borrower or lender to borrower. What you're seeing right now on the screen is that they are 100% sure that it's not going to stay up here, right? Because it's showing 67% is at 500, so that's less than what this is at. So this is showing that the interest rates will get reduced. Will get reduced. Now, could this go to zero and this go to zero and like both of these just stay at the current target? Potentially. We don't freaking know. Um, but from what we're seeing right here, we can make the assumption that there's a very good chance that these interest rates could get cut, right? What do we know about the cutting of interest rates? We know that the cutting of interest rates encourages borrowing. We know the encouragement of borrowing increases money supply, and the increase of money supply depreciates whatever currency we're talking about. In this case, we're talking about the US dollar. So just from this Fed Watch tool, when I'm thinking of things on a higher scale, so that's really my higher time frame markups. I'm looking at where we can start to find a level because I just want to be able to determine where can the bottom be? Because that's where I believe we're going to go on all of my pairs that USD is the primary currency, similar to USDJPY, right? Similar to USD CAD, similar to what's another one? USD Chiff. Like all those pairs where USD is the primary currency, I'm going to be looking bearish on those because of the information that's available to me. So that is why when we talk about the monetary policy, why that's so important, right? And it says Federal Reserve closely monitors the NFP, and if you guys haven't seen it, I dropped a YouTube video in the Discord. A really, really good dude that I follow him on Instagram as well, but he really posts great content, informative content on the crypto space, on the Fed, on the government, just like how they kind of operate and whatnot. So just if I ever see anything good, I'll always share it. I'll never gatekeep anything. And I'll always credit the source where I'm getting stuff from. But this is a really, really great animation. First of all, it's hilarious because they like it's accurate. The accuracy is just so funny. But it's really informative. I think the animated side of things just makes it really easier for us to interpret. It's just more simple. Let me not say easy, but it's just more simple for us to interpret. Um, so watching that will help you understand the Federal Reserve a little bit more. But from just the information I gained from that animation is the Federal Reserve is owned by a bunch of private investors. The name federal, that doesn't mean that they're a government entity. Like they're not government based, right? And it's funny because there's a number of different federal banks in the world that have no like government. When we think federal, we think FBI, right? That's like government. Um, this is not the same as that. Like the Federal Reserve, from my understanding, is basically, I'm not gonna say controlled, but they were constructed by a bunch of private investors. Who are these investors? I don't know. I guess they're private. So I'm believe me, Basel three, the Federal Reserve, and this chart that I'm going to show you guys in a little bit. Just a few things that I'm going to continue to dive into. That's one thing about this trading journey and just life in general. If you constantly seek information, the next thing you learn within that, there will be something else you're trying to seek from there. You know what I'm saying? So as I'm learning about macros and inflation and monetary policy and all this different type of stuff, I just continue to get deeper and deeper because I just become more curious and curious. But at the end of the day, this stuff helps us interpret price and interpret where price could potentially travel. I said that word twice for a reason because we can't assume price is going to travel anywhere. Just like I was talking about a second ago. Um, Now, I can have a bias about something, but do not allow that bias to pollute the information that we are receiving in live time. I've done that multiple times where I allow my bias, and then my bias is surrounded by my analysis, basically. And I've allowed that to pollute the information that I get to react off of. Instead, I'm sitting there waiting for the information I already assumed I would have to react off of. Does that make sense? And we want to be, like Justin said a little bit earlier, patient. We want to be patient. So with this information, in my opinion, allows us to be a lot more patient. It's a lot more patient because we understand on a little bit of a wider scale. So we don't really get caught in the ranging of the market. And when we are in the ranging of the market, we're already in it. We're already in the trade to where we've been in profit. So now it's ranging and now we're just holding. Or we have chosen not to execute and we're waiting for price to break out of the range. Um, so that's why, this stuff is so important as we're about 19 minutes left until NFP. But that's why this stuff is really important for us to understand. And that's another reason why, myself, Q, why we devote so much time to increasing and expanding our knowledge so you guys don't have to. So you guys don't have to, because we kind of have like this obsession. I'll call it that, an obsession with this thing called trading and macroeconomics. No, I'm just kidding. I would call it a commitment. We're just super devoted to our knowledge, and then our community, right? Like at the end of the day, we we can't do anything that is not to high value. That's It's just not in our blood. When I'm talking, I can speak for he's not here right now, but I know I can speak for Q when I say that. It's just who we are. It comes down to how we were raised. It comes down to, back to our parents. So shout out both of our parents, who prepared us for stuff like this, right? To be able to pursue stuff like this, right? So they may not have given us all the knowledge and information about the specifics, but when you build character traits in somebody, those can be dispersed to any industry, any field, any pursuit, anything at all. So let me see here. All right. So continuing back on this 17 minutes until this NFP folder, as my trade locker is being super weird. Let's see. All right. So then the Federal Reserve, back to this, the Federal Reserve closely monitors the NFP report as part of its dual mandate to maintain maximum employment and stable prices. When the when the Fed, the FOMC, those two should be the same thing. Um, Let me actually double check that because I don't like to say things that I don't know if are completely accurate. Yeah. So it's a division of the Federal Reserve that sets monetary. Okay. So the FOMC is a division within the Fed. That makes sense. Within the Federal Reserve, which we just talked about, the Federal Reserve uh, allegedly, we have to be careful when we talk on these, certain things that we say publicly, but allegedly, the Federal Reserve is owned by a bunch of private investors, and then the FOMC is a division within the Federal Reserve. So hold on to that. There, the Federal Reserve closely monitors the NFP report as part of its dual mandate and maximum employment and stable prices. This is something you're going to hear Fed Powell talk about a lot, which we'll probably hear him talk about Friday at the Jackson Hole symposium. But a strong NFP report may indicate economic growth, potential inflationary pressures. Interesting. This could lead the Fed to consider tightening monetary policy by rising interest rates. Conversely, a weak NFP report might prompt the Fed to maintain or lower rates, right? This could lead the Fed to consider tightening monetary policy by raising interest rates. Conversely, a weak NFP report might prompt the Fed to maintain or lower rates. Okay. Effect on the US dollar. The NFP report can significantly influence the US dollar. Strong NFP data may lead to USD appreciation. Weak NFP data may USD depreciation. Same thing we just said here, right? The effect is often reflected in the DXY, which measures the value of the dollar. Okay, that's fine. Impact on other currencies. Euro USD often experiences high volatility from this NFP. Commodity currencies may be affected due to their correlation with risk sentiment. Okay, risk sentiment, which is another market analysis that we can utilize, which is available through Forex Factory. Forex Factory has their own sentiment. Don't know if the risk sentiment needs to be specified within this. I don't think so. I just think you need to understand the sentiment, and then, within that you can determine, okay, if 70% of people are longing, then that would mean 30% of people are shorting, and then you kind of have the overall sentiment of the market, and then you can gauge which side you can deem has, you know is in a more risky situation. Is kind of how I'm interpreting that there. But emerging market currencies can experience significant moves based on changes in USD strength. Um, so that is that. Doesn't really give me specifics. The main that I care about within this, honestly, is the fact that it influences the DXY. I just kind of threw this in there in case there was any way that traded any other pairs. Um, and I wanted to see if it brought up a USDJPY, which it didn't, which is fine. Um, when trading around the NFP release, expect increased volatility. Be aware of potential price gaps. Consider wider stop losses to account for market swings. Watch for revisions to previous month's data, which can also impact market reactions. I normally see this more than I'd like to in terms of the revisions. Never exactly knew why they happened, but it's good to know that they are abnormal and they do have greater impact on the market when I'm not gonna say they do. I'm gonna say there's a chance that they could have greater impact on the market when previous month's data is revised. Um, Annual revisions significance. This is kind of important part I wanted to get to here. The annual revision of the NFP report can have additional implications, provides a more accurate picture of long-term employment trends, right? May lead to significant adjustments in historical data, can cause reassessment of the overall economic outlook. Okay. Traders and analysts will scrutinize these revisions for any changes in the perceived strength of the US labor market, which can influence longer term trend. All right. Market reaction. Two common approaches to trading the NFP pre-release placing trades based on predictions. Now, as long as you got risk, that's fine, but I don't like to be a predictor. However, during news, I don't mind playing that game. I don't mind playing that game during news. Because that's the risk to reward type stuff. Post release, waiting for the initial market reaction before entering trades, what may be safer, which is completely true. I agree. That is why we tend to wait 15 minutes prior and 15 minutes after and let the market do its thing and then act off of react off the corrections and whatnot. Um, but yeah, so that is kind of the briefness of the NFP, right? And so why does it matter? And that we're about to have this NFP folder here really shortly, is because it's going to give us a wider scope of the economic outlook. We get a wider scope of the economic outlook. We can understand how we can play within those confines. We can find either, you know, say we get just poor DX USD news. If we get poor USD news, then like I said, without having a bias, I can observe the potential areas that price could travel towards the bearish side of things. Um, and so just looking at my chart here, this is USDJPY. Then I'm gonna get into gold for a little bit, and look at that chart and see what's cooking on over there on that side of the turf. Um, so this is my USDJPY, right? And this is my weekly USDJPY chart. One area that I'm really sure, I'm not even gonna say that. But one area in the market that I want to see USDJPY move to is this area of liquidity. This little spot of look, this is not a little spot. Let me correct myself on that because this is the weekly candle, right? So there's a lot of orders down here, right? There's a lot of orders down here. Um, that need to get grabbed. That need to get grabbed. Ironically, where is it at? It's at a decision making level, a weekly decision making level. That three candle structure right there. You guys know that's how I find my decision making levels. That's how I determine where I want to put my horizontal lines. Um, just off of those three candles. So we see not only the respect of that candle, but we see uh, the revisit of that level of price, right? And the leaving behind of a reason to come back to this area, right? So that's what I'm saying. Price left a reason to come back to this level. If we take a look on it's my 12 hour. Like, why does a guy have a 12-hour chart? It's because I like it. If you look at my 12, the reason I have the 12-hour, to be honest, it's just slightly different than One second. My lady just said that they were boarding the plane. The reason I like the 12 hour is it's just a little bit closer than the daily, but not too far out from the daily like the 8, even though I like the 8 hour because my 3 candles gives me a daily area, basically, is how I'm looking at that. But I like the 12 when I'm just interpreting, just doing my top down, just so I can get a gauge. I just like getting a read on stuff, right? But my 12 hour, we see that price was respecting this level for about a day or two, right? Broke through that level and then immediately came back through it again, right? And that's that 12-hour level there, right? And then what I'm noticing was at that level, right, is if we look at this wick, let's do this. What I'm noticing, right, what was at that level? Inefficiency and price action, right? Inefficiency and price action. If we look at this whole way down, there is an inefficiency here, right? But if we look at if beside that inefficiency, which just goes to show that price and I'm really normally cautious when I say stuff like this, but I can say this part with confidence that price will come fill these inefficient areas in price action. It will. It will, it will, it will, it will. Right. And so it left it up here, right? So about 160, 161. It left it up here. If we just look lower than that, though, even on this bearish move down, it filled every other area that it left on its way down, right? So after this candle, let's look. Okay, there would have been, as we got 5 minutes, I'm going to get through this really quick. There would have been this, right? Inefficiency and price action. But what happened, right? Did it fill it all? No, but it didn't fill this either. However, this balanced price out more than it did, more than it was already, right? So that is what we want to see, right? That is what we want to see. All right. And then so after that happens, right? Let's keep going down. Let's keep going down. All right. There would have been an area here, very small area. Okay. Not an area created there, not one there, not one there, right? And then they just that whole bearish move down, it balanced itself out. Okay. Then it ranged. Then we took a small move down. Was there any inefficiencies here? Nope. No inefficiencies there. No inefficiencies there. Check this inefficiency. So inefficiency left there. Inefficiency left there. That inefficiency filled. Right. So there's a few areas on that way back up, as there should be, because price likes to hunt three things: inefficient areas in price action, liquidity, and decision making levels. Right. So that's what we see there. That's what we get to see there. All right. So now let's get into this though. Let's get into this though, because we're sitting on a this is old. So let me fast forward here. All right. All right. So let's see what happens here. Look at the similarities in movement, DXY, USDJPY, super clean. And then my third one that I'm going to get into, AUDJPY. Look at all three of those pairs. All right. DXY is just the currency, but look at Just clean. Just clean. Right. Uh, So let's see what 2 minutes until news, 2 minutes until news. Let's see what goes down. And no pun intended, but I think that's where we're headed is down. Oh, one thing I wanted to show you guys was this chart right here. This chart right freaking here. So this right here is the US government bonds chart. This US government bonds chart is our 10-year US government bonds chart. Marcus, why are we watching a US government bonds chart? Because I haven't gotten deeper into it besides just looking at the chart. What I want to do is actually have my two charts side by side and look at price correlation between that day. Um, because this chart actually on like a smaller time frame looks actually really gross. Um, it's funny too because guys, even Justin, looking at from this part in price and just looking at our entry confirmations, it's funny that even this chart, we can find an entry point in here, but um, I'm more of looking at this probably on the 8 hour time frame as we have news in 20 seconds. Um, so let news go through. But why are we looking at this? Because look at this on the side. It's measuring it in percentages. Once this is going up, that is going to appreciate the dollar. When this is going down, that is going to depreciate the dollar because this is directly correlated to how it affects the interest rates. And NFP just shot through the moon. Just shot through the moon. I heard my jingle. Good morning, Joe. Just shot through the moon. Let's see what that came out as. I want to see what the result came out as. It's not came out yet. Interesting. So we see that. Look at that. And this is actually probably the third time I'm viewing this chart. US government bonds. The information. So a few things here. First, I have work at 8 p.m. or 8 a.m. So I'm gonna be getting off here in probably 10 minutes so I can just get ready for work. Um, Second thing is I actually took a bit of a risk on that entry, which I don't care. I plan to do that on this call with my account. So I only had about 20, actually it was $31 in my account. Um, and I just wanted to take a risk. I just wanted to take a risk. So I actually took a sell on it was just before news, a little before news. I took a sell. So when did I actually take that sell? I'll tell you right now. It was at that was last night. It was at 6:12. So I took a 12 at 6:12
I was holding it. I was holding. I was holding. I was holding it. Um, and then ended up not working out at all. Ended up not working out at all. But that's fine. I plan to put more funding in my live account. Anyways, but just wanted to state that. Next, still haven't got our data from the NFP, which is strange. Not any more strange than us not seeing that NFP even on our Forex factory. So not sure where that data is right now. Um, which is actually really interesting thinking about price movement. Like how is that? How can we not see that data as gold's moving up with a really, really nice entry point potentially. Let's check the DXY and I'm gonna come back to the treasury. Look at that DXY. Mm. So how did I? Well, that's it's actually super interesting. Am I missing something right now? Oh, okay. I know what I'm missing. I was like, hold on, am I missing something on my chart? Why is this not showing me what actually happened? Here we go. Let's pay attention to this. So this area right here, where's my this area right here? We just accumulated, right? All of what's in here, especially from about this level and down, is liquidity. And what did this come up here and do? Just creep above that liquidity. What level is this at? My 5 minute decision making level, right? So we can go that 5 minute decision making level was created quite a bit ago, right? So let's actually see where that 5 minute decision making zone was created from. Maybe it's not a 5 minutes, and I just labeled it a 5 minutes. Okay, so it's my 15 minutes, not a five. So Wix touches right on the 15, cleans that cleans that liquidity out there. Um, Based on DXY, I'm assuming NFP was on the bearish side of things. I had a feeling NFP would be on the bearish side of things just based on what it told us that the folder meant, and then what we know about the potential for the interest rates already. So the outlook is kind of already like the picture has been painted. It's just okay, do we see any like improvements coming in the long term? That's kind of how I'm viewing it at this point now. Like we've kind of all seen the market tank, just tank. So let's see. So that data still is not released yet. Yeah, that's super weird. I don't think we'll get the releasing of that data today. Um, I'm I'm not sure. Let me actually I want to see if I could locate said data. August 2nd. Don't need August 2nd. Hmm. That's crazy too, because so like this NFP says those revisions go back to April. Um, so they're essentially going to look at past data and revising them to provide a little more insight to the true health of the US job market, which will just influence the monetary policy and how and will influence the change in those interest rates, whether it goes down, by 25 base points or 50 or 100 or whatnot. Yeah, that's actually interesting. I cannot find any data on that. We'll probably get a little more insight come later today with these two. Um, FOMC minutes and Jackson Hole symposium. So what I'm gonna be doing, I won't trade probably for the rest of the week. 'Cause I'm just gonna get my funding together. Just get my funding together and load my live account back up. Um, so at the beginning of, let me see, when was that? Tell you guys exactly when I put this money into my account. So I started my live account on April 12th with $201 on, and that was actually $201 I just literally had sitting in my KOT Forex I had no idea about. And then I put the remaining that was left sitting in there, $122 I put on June 12th. So that got my balance to $304. And today I actually blew that entire account. I actually blew that entire account. I started the day off at, I think it was like $32. Um, and like I said, I took a trade on the USDJPY and I just let it do its thing. If it was gonna I'm not gonna just recommend that approach. But the only reason why I did that um was just because I kind of wanted just a fresh start. So it was either gonna go really good for me, or it was gonna teach me an entire lesson about this account, right? Because I haven't had great execution on this account. Um, and that is not that is truly speaking from a discipline standpoint, a consistent standpoint. Um, and so, you're hearing this coming directly from me, and I have a hard time being disciplined with my trades, right? Like it's freaking natural. It's not natural, but it's human. Um, but just because it's human doesn't mean that it's acceptable, So I just have to be a lot more patient. I have to activate patient Pete a lot more on these calls. Every time I get on these charts, I have to be patient. Um, but I just wanted to provide that transparency with my live account. Um, and I truly, truly just wanted a fresh start. Um, so probably not something that I would have been able to do, like approach that way, you know, even a couple months ago, honestly. But being able to understand the long game is why I'm comfortable with what's happening right now. And this is actually hilarious because if I was just patient, I could have probably entered a sell. I would actually be in profit now, but my account didn't. It couldn't withstand this. It couldn't withstand this because of the lot size I had and this move that it made. So I'm saying that to say that it doesn't have to happen quickly. It doesn't have to happen quickly. Um, there was a moment in time where I got lost in wanting it to happen quickly, you know, in terms of like being profitable and seeing that in my account. Um, what I got really sick of seeing, to be honest with you guys, is my account in all the mistakes and lessons that I took like within that account. And so, yeah, I could have approached it with, Marcus, why don't you just recover this account, you know? Just grow what you have in this current account right here. And that's essentially what I tried to do today. But just psychologically, I was just really disappointed in myself when I would see my trading history, like on my trade locker. Um, like that would kind of fiddle with me. Like I'm not gonna lie. Just seeing that, just the pure sight of seeing that would mess with my psychology of VXT and understanding the long game, understanding that, you know, $100, 5% a day, $5 a day. The next day it goes up to like $5.70. Like understanding that I am fully bought into that concept, but when I would see it on my trade locker, it would mess with me. Um, so I'm not using this as an excuse for me blowing my account at all. I'm saying I was prepared for that result because I was over this account at that at that point, and it's 30 bucks. What the freaking heck? We spend that. I personally spend that on energy drinks. And I'd probably say in a week and a half just from going to the gym, just because I get one per gym sesh. So yeah, it is what it is. And it's now time to move forward. Um, and I'm freaking excited, guys. I can't tell you the type of um, disposition I have on my trading right now, on just on my personal trading.
I was doing some back testing last night, just going through my trading log, and it's just beautiful once you confirm that you didn't act how you should have. Because you can go and see, oh man, if I would have just did what I should have and not even tried to force the market to do what I wanted to do. That's what I did a lot. That's what I started to do a lot. A lot, is force the market to do what I wanted to do instead of reacting off of the information I was presented, right? We can still have our analysis. We can still have our areas we think price could potentially travel, right? But whenever there's information available to us and we just deny that information because we want the information that our analysis is telling us to be correct. Whenever we're doing that, we're putting ourselves in a very, very difficult situation because not only will it be hard for us to because not only are we trying to force the market to do what we wanted to do, but it's going to be hard for us to forfeit that position because we are so attached to our analysis, right? And I'm speaking directly from my experience in the last month. In the last month, like my trading over the last, probably say, I'll go to my trade log actually. That's what it's for. I have no problem getting on here and being transparent, because that is what matters in the journey. Like for you guys to see how the journey actually goes. It's so easy to paint this beautiful picture on Instagram of, you know, how the journey goes, right? But to really show you how the journey goes, this is where we're at right here. So I would look at this. Look at this section. This section is what hurt my entire account. This this little period, this little even I'm okay with some of these up here. This period right here, let's call it from this 22-hour lesson, July 22nd to August 7th. That is 1, 2, 3, 4, 5, 6, 7. That's 8 trading days. 8 trading days as I'm over here getting really enthusiastic and passionate about my journey, right, guys? Because I know that I'm going to end up where I want to be in this trading game. And so the only thing I have to do is be honest with myself. Honest with myself. That's it. Marcus, why are you losing? Okay, fix it. Period. It's that simple. If I was losing trades because my strategy sucked, I would have a completely different disposition. But that is so far from the truth. It's about as far as the truth away as anything could be. Because I've gotten here and I've gone through my trade log. Um, and then I've got on the charts with my trade log and seen what went on. But we're talking about 8 trade days, guys. That, and I said I put this in here in what, in April? So from April to August, right? 4 months of time, right? It took 1 week to really, really hurt me, right? And all we got to do is take the lessons, is what I want to show you. Look at the bottom right corner. You guys see my screen right now?
Yes.
Cool, cool. Bottom right corner. I had a total of $301 in this account when I told you I put in $120 back in June. I had 301. In 8 days, I lost $243 in 8 days. There's no reason that should have happened besides two things: poor execution and poor risk management. Simply put, poor execution of what? My trade plan, because I'm seeing, and the reason I have some of these highlighted is red means it's so depending on what time of day, these type of reds indicate I didn't even give my trade a chance to go into profit, which means if I didn't let my trade breathe, I wasn't confident in the entry, which means I did not execute my trade plan because I have confidence in my trade plan. I have confidence in my strategy, in our strategy. I have confidence, extreme confidence. So if I'm going to trade for 2 minutes, that's just completely unacceptable. That's unacceptable. I lost $7 on that. That's ridiculous. To be in 2 minutes and then sacrifice $7 on my account. Anyways, um, then I have ones like this. This is outside of my trading hours. On my trade plan, thing right here. It's my whole trade plan. We just wrote it out, right? Now, to my defense, I did not have the physical copy of my trade plan until we got to this blue line. But that's not an excuse because I knew my trade plan, but goes to also show the importance of actually having something, whether it's in your computer digitally or hard copy, but an actual trade plan. Because before I had it physically, a physical copy or in my computer, it was all in my head. It was all in my head. That's entry positions are in my head, exit positions are in my head, my inverse trade. So basically flipping our confirmations and trading corrections is in my head. News is in my head. The dollar, like it's just all in my head. And Jim Rohn, one of my favorite speakers of all time, he says something that we cannot use our brains as a filing cabinet because it's 100% true. So just write everything down, get it out of your head so that your eyes can see it and then put it back in your head. And now it's actually stored rather than just a thought that you're trying to continuously store. That I struggle with doing that. So to my defense, that blue line is then, but still no excuse, right? Still no excuse. But that's outside of my trade hours, that 11 o'clock outside my trade hours, 9 o'clock outside of my trade hours. Now, there is sometimes I profit from trading outside of my trading hours. And I'm going to show you an example. Let me find one. I'm going to show you an example. All right. Boom. Right here. Look at this. Right. 5:30 to 11:30. Now, 11:03. I have no, and then I have to go actually. Well, I get to go. Um, I have no problem trading overnight. I don't. The thing is, I have not had ample data for me to have as much confidence as I have in the New York London overlap in the morning and then through the New York close come 2 p.m. I don't have the same amount of data. I've probably back tested the session that we trade, guys, and like through New York, probably over like 2,500 times, like dead serious. So I have seen over and over and over and over and over again, specifically those hours, New York, London overlap. So just give me about, so just that 5 a.m. to 2 p.m. So, 5 to 9, we have the overlap. 9 to 2, we have market, we have New York. So 5 to 2, that's where I'm gonna say most of my data has come from. Now, I wouldn't even know to be able to execute in my later sessions and overnight sessions if I've never back tested. So I have seen price move on those time frames, and I have understood how it could potentially move overnight. However, I didn't have as much data as I do with my other sessions to be able to determine, okay, I can trust this consistently, right? Consistently is the point, right? Because I profited this time, right? $8. Look above it again. I profited this time $20, right? Watch this because this is why the trade plan is so freaking important. 11.19. How much did I learn? I learned a $52 lesson. All because I acted outside of my trading hours. That is the reason why I was even in that situation. All I had to do at that time of day was put a position on my chart because I just need to gather data at this point. If I want to enter, that's fine, but there will always be another entry point. So for tonight, let's put a short or long position based on what we want to see since we're about to go to bed. Let's put a short or long position. Let's put our risk. Let's put where we would want our take profit to hit because we're gonna go to bed. So what we want to happen with us doing this is we enter, we go to bed, and we wake up and either see it hit our take profit or we see it hit our stop loss. Right? Those are the two results we're looking for. And so, but since I don't have the data to actually participate myself within this market right now, let's just put a demo trade up there, not like a demo trade, like a paper trade in your account, just on your chart so that when you open that chart in the morning, you can see, okay, so price, okay, it stopped me out right there. Okay, so I would have got stopped out right there. Okay, maybe I slide my stop to the previous low because at this time of the market, it wants to manipulate a little bit more than later on in the day. And then we start to build that data and we start to build in more understanding on how price functions at that time of day. There's a reason there's something called TPO, time, price, opportunity. Time, price, opportunity. Time is the time of day, right? That's what we're talking about right now. Price is the levels of price, right? Now, not just the actual, 24.15, but the premium levels, the and discounted levels of price. And that's not something I'm super keen to being able to break it down to you guys about because I'm a little iffy on and I'm not gonna say that. I'm not gonna say that. I'm just not to break down the premium and discount prices. That requires the Fibonacci tool, which we don't utilize. But when we're talking about TPO, that's part of it. Is the price, is understanding premium and discount prices, and then the opportunity, of course, is just the opportunities within the market from how I interpret it. And where do we find those opportunities? We find them in specific sessions, maybe during news and stuff like that. And that's kind of where I'm at with that. So just wanted to show you guys that it took me 8 days to blow this account. It didn't take one. It took 8 for me to lose literally almost every dollar in this account. And it's poor risk. So you're looking at how many L's did I take here? 1, 2, 3. This is actually the period where I lost 9 in a row. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So 21 trades, and I see a total of 6 wins. 6 for 21 in 8 days, resulting in a $243 account decrease. So that is how it started. Now, it's only finished if I quit. And believe me, guys, we are just getting started. So I hope, being transparent this morning and showing you guys, and I'll even show this as well and show you what my account looks like right at this very moment. So if you look down here, right? So in order for me to open this live account back up, I'm actually gonna have to put in 2788 to bring me back to zero. Right. So I got to put in 2788 to bring me back to zero. I'm probably going to do that just so I have a good standing with KOT Forex. And then I'm gonna open up a totally different KOT Forex live account because I don't want to see this. Like it's gonna bother me. I don't. And Trade Locker hasn't updated their platform yet to only show like today's trades or tomorrow. It shows everything. And I just don't like seeing that at this time because I get pissed off like genuinely. Um, but yeah, I hope, me showing you guys this today brought some encouragement to your own trading. And just so you can hear my disposition about my lack of success. It does not discourage me at all. It just doesn't. I can't explain why necessarily. Um, I mean, I can't explain why. It's just, guys, we have a damn good strategy. Our strategy, the consistency of our strategies is incredible. It just comes down to us removing the human nature out of us, and acting sometimes outside of that human nature. Um, and then, risk management, it is highly important. This is why the trade plan is so important. So I hope those are stuff we start to take serious. If we aren't, and if we are, then that's great. Just keep stacking the days, and brick by freaking brick, guys, we're going to get to where we want to go. VXT, volume times time. It's a formula that you're going to hear for the rest of your involvement with us. Because it's not something that just involves trading, but it's something that we can incorporate to literally anything. If you're in the gym, or if you're trying to get your fitness up, volume times time, right? If you're trying to, have a better diet, volume times time. If you're trying to increase your relationship with your spouse, volume times time. If you're trying to better your relationship with your kids, volume times time. No matter what it is, it's volume times time. The longer you do a thing, the better you will become at that thing, right? So no matter what it is. And guys, when it's attached to something like Forex trading, and just trading in general, it doesn't have to be just Forex. Now I'm biased towards Forex, $7 trillion market. Um, and No, seriously, Justin, that is me. I literally try to trade just however I want, not however I want, like, but I use my analysis and whatnot. Instead of just saying, Marcus, trade the freaking, and what you guys are gonna hear it called is VXT. Trade the VXT strategy. Trade the VXT strategy. If anything, trade inverse VXT, but trade the VXT strategy. But even with that, Justin, with proper risk from us, we can do that. Like, because as we become better at trading and we become more confident in our trading, it starts to become more like we want to test our knowledge, and that's okay. Like it's okay to test your knowledge. Just have proper risk. There's times where I test my knowledge and I force my knowledge to be correct. So I never close the trade until I'm like basically forced to, which is just completely ridiculous. But yeah, I'm actually about 24 minutes. I gotta get to work now, but I really hope this call helped you guys this morning because it definitely helped me. I'm really really excited for this next chapter for my live trading account. We Please listen to the live call yesterday. We talked a little bit about, one of our community members, was just gave a very, very good perspective, and lecture on just what we have available to us here. So I encourage you guys to check that one out from yesterday. But yeah, I'm gonna accumulate some funds, collect some funds, and throw $100 into my live account by next week. Um, and then yeah, start with growing again from there. I'll always keep this trade log available and accessible. But I'll start a whole fresh one. And maybe what I'll even do is not start a whole fresh one on my trade log, but just put a spot, like kind of like I did from this line. So this is basically when I got my trade plan. Um, And as we see, very, very little changed even after I got my trade plan. So just freaking discipline, man. That's honestly the beautiful thing about it too, because our our trading success, quote unquote, however you deem successful in your trading journey, is strictly dependent on one phrase that I'm going to leave you guys with, and then I'll leave you with three other letters. But the one phrase that I'll leave you guys with that is going to be accurate, with what contributes to our success in our trading is controlling what you can control. So, we can control how we execute on our trade plan. We can control our discipline, our patience, our trading environment, our consistency. We can control what we can control, guys. And I will bet the freaking ranch that everybody can become a profitable trader by just controlling what you can control and then applying VXT. And I will see you guys tomorrow when I'm back with Bloom CLQ.
Thank you,
See
Marcus.
you guys.
Appreciate it.
Appreciate it, Joe, Justin.